Hey, this is Mike Addis. Again, we're going back to liquid and illiquid markets. And the reason why people like to trade in liquid markets because they believe that it's easy to make money, big amounts of money, and they don't really have to work at it. They look at their computer screen. I'm looking at the computer screen, and they hit the button and they buy $50,000 worth of GameStop. Or they buy options in GameStop with the anticipation that it's going to continue to go up. The problem with that is there are so many other forces out there that are going against you. So when you bet, for example, I'm just using GameStop because GameStop is a very volatile stock. When you bet that something is going to continue to go up, and you're anticipating that you have a bunch of other guys that agree with you, believe me, there's another side to the coin where there's a lot of other big money betting it's going to go down. So it depends on which way the market goes. If you're betting something is going to go up in a liquid market, we're talking liquid markets like the stock exchange or options or whatever, and the forces against you are betting that it's going to go down, especially in the case of GameStop. I'm not picking on GameStop. Guys are making money, but for every guy that's making $1 million, there's a guy that's losing because it's a zero-sum game. Someone's got to win, someone's got to lose in a liquid market. That's the problem with liquid markets. They're very risky. The reason why people want to go into liquid markets is because they think they can make $1 million relatively quickly because they'll see one guy that made $1 million. But that guy that made $1 million probably had a long-term investment. And I think we know who we're talking about here. The young man from Massachusetts that bet big on GameStop, and he waited and waited and waited and waited. He's kind of like in a different situation. Now the stock is being driven way up. I don't know where the stock is right now today, but I can almost assure you what goes up will come down eventually. Now where it's going to settle out, I don't know. But I don't see the valuation, using GameStop as an example, that the stock is worth. I'm logging in right now to check it out. I just don't think this stock is worth whatever it's selling at, $250. It means that it would be selling somewhere around 1,000 earnings times earning. PE ratio would be 1,000. I just don't see the stock as being there. Now people are speculating that it is going to go there. GameStop this morning is down 22 to 243. It was up 343. Why? Because the forces in a liquid market are betting against GameStop. There's a bunch of guys betting for it, but there's billions of dollars going short on GameStop. I'm guessing, but I'm almost certain I'm right about it. Why? Because the fundamentals of the valuation of this company is just not there yet. It may be there a year or 2 or 3 years from now, but not at 241. It's a $20 stock. What's my point? The point is that people want to be involved in liquid markets because they think they can make $1 million quick. Guess what? You can lose $1 million just as fast as you can make $1 million. Matter of fact, the odds are way against you because there are professionals out there that are betting against you all the time. And they do nothing but manage billions of dollars, and they also have connections with people that create money, which are called banks. See what I'm saying? So what's the point? The point is if you deal in illiquid markets, buying real estate, selling real estate if you want to trade. If you want to buy real estate, which I do, and I invest in the real estate, I have no intention of selling it. I just want to create income off of the asset that I'm purchasing, and real estate is the example. When I buy an inventory, I use mostly asset recovery. That's my business, and it's used technology. I'm buying that inventory not to hold it. I'm buying it to sell it and take a profit on it. When I invest, I'm investing in real estate or public companies or private companies. I have a private company in Nigeria right now I'm investing in with a super smart, intelligent young man. That's a private investment in a foreign country, and I anticipate that there will be income that will come in for me and also mostly for him because he's doing all the work. I'm putting up the dough. That's called investing in an illiquid market. His day-to-day operations, he has to turn the product into cash. So he's basically trading in that particular product, but it's an illiquid market. Prices don't fluctuate. He controls the value of the product. This is Mike Addis. Thanks for joining me. Hope we haven't burnt this to death, but it's an important point because a lot of people think they're going to get rich in liquid markets. You cannot get rich in liquid markets. You're going to lose your butt. You may win at some point over a long period of time if you learn the game, but the odds are definitely against you. And Apple's up $2.34. Thank you very much. Today is February 11th. Oh, excuse me, March 11th. Thanks for joining us. Please hit the subscribe button. Don't forget to comment, and we will see you on the next video.